Is the banking crisis finally over in the United States, or did the federal government lie to us to stop the massive panic that's been going on? And Charlie Munger explains one key aspect of the real estate market that could take a turn for the worse, and that could be catastrophic for our banking institutions. Make sure you guys tune in all the way to the end of this video to find out. Hi guys, my name is Ryan with Big Dog Investing. Thank you guys for tuning into my channel. If you guys could do a couple of things for me, if you guys go ahead and like, comment, subscribe to my channel if you guys have not done so already. Click the bell notification down below so YouTube can send you guys notifications whenever I release videos. Watch my videos all the way to the end. If you guys could share my videos and share my channel with anyone, I'm trying to grow my channel as much as I can, and I definitely need your guys' help in doing so. Getting started today's me Monday, May 1st. Once we reach 200 and 250 subscribers, we're going to be doing an HBAR / XRP giveaway. So make sure you guys do subscribe. On my channel, we mainly focus on cryptocurrency, but we talk about anything related to investments. And with the massive impacts of the financial markets with banks and real estate, we're going to be focusing on those in this video. So again, make sure you guys tune in all the way to the end because there's a lot of important information. So earlier this week, the U.S. government prepared for an immediate takeover of First Republic Bank. They finally took over First Republic Bank as it was dropping drastically in stocks as reports came out that they were insolvent. We saw that Jim Cramer was talking about earlier this year how First Republic Bank was one of the best banks in the United States. And then since then, the stocks have fallen since like 97% from its previous high. But JP Morgan was set to acquire First Republic Bank, and they actually did acquire it. But it's kind of crazy that they were able to because JP Morgan should have been ineligible to acquire First Republic Bank. It controls over 10% of all US deposits. Too big to fail. This ends well. So we wanted to obviously vet our sources, and everything that we talk about is going to be in the comments for you guys if you guys want to do your guys' own independent research, which I would highly recommend. But right here it says in 1994, Congress adopted a policy that bars a bank from buying another bank if the combined entity would hold more than 10% of the country's deposits. With JP Morgan and then acquiring First Republic Bank, it would hold more than 10% of all deposits, but for some reason our federal government allowed this to go through. Now, this is really interesting because we have a huge banking crisis that's been continually going on, and it's been really bad this last month. So it says 3 bank failures since March of 2023 held more assets than all of the banks that failed during the 2008 financial crisis, even after adjusting for inflation. But this time is different, they say. And no, it's the same. And we have a little graph right here that shows the US bank failures in each year seized by total assets and adjusted for inflation. It's just crazy just how actually detrimental our financial markets are and how our federal government is continually lying to us saying that everything is going to be okay. If you guys want to look at this graph again, it'll be in the comments. This is really interesting though, because with this banking crisis that's been going on, we've seen a lot of stocks being traded with our congressional candidates. So, breaking news: another congressman literally traded banking stocks again. Lois Finkel sold FRC on March 16th, avoiding the remaining 80% drop. She then bought JPM, which First Republic, and then JP Morgan, the bank, buying FRC on March 22nd. And if you guys want to look at all of the other politicians, there's a link right here that you guys can click. But again, it'll be in the comments. But there's multiple congressmen, and it's not just Democrats and it's not just Republicans, it's both of them. And I'm assuming that there's probably some independents in here also. But if you guys want to, it just shows their stocks and stuff. If you guys know how to read charts and stuff, I'm not going to get into it. But a lot of our congressmen are actually buying and selling stocks that are related to the banking institutions that are going on right now with insider trading, in my opinion. I mean, avoiding the 80% drop and then buying JPM, JP Morgan stock on March 22nd, and then on May 1st. First Republic Bank gets acquired by JP Morgan, which caused the stock price to increase. It just blows my mind. Now, along with this, though, we have to figure out what's going on with our interest rates. So there's going to be a meeting. So the FOMC holds 8 regulatory scheduled meetings during the year. And in these meetings, they talk about how inflation's going in the United States and if they need to raise interest rates. If we look right here on May 2nd and 3rd, they're going to be holding these meetings. So they're going to talk tomorrow about what's going on with inflation. They're going to finally end their meeting on the 3rd. And then at the end of their meeting on the 3rd, Jerome Powell is going to release a statement and talk about whether interest rates are going to rise or if they're going to remain the same or if they're going to drop interest rates. Now, the speculation is that they're going to raise the interest rates 25 basis points, but only time's going to tell. So this is a funny little animated cartoon. It says the Fed is trapped. There is no good choices. Soaring inflation versus banking crisis. With more banks failing, which should they go? And in my opinion, they should not have a rate hike. Obviously, we're all feeling the struggle right now. I mean, gas prices are continually on the rise. Um, Interest rates are already well over what they should be right now, in my opinion. And we just keep on printing money after money after money. We saw this with COVID. They were raising they were lowering interest rates but raising the amount of capital that was actually being printed, and this is what caused the massive inflation in the United States. um, right here it says Yellen warns Congress Treasury may run out of cash as soon as June, and there's talks right now that we need to raise the debt limit. So right here, so the debt limit is pretty bad right now, but also with the debt limit, there's amount of money that the government's actually receiving. So we just had tax day last month. So tax recipients are down from earlier estimates. So they were expecting to receive, the government was expecting to receive more taxpayer dollars, but they actually got less than they were planning for. So the US Treasury also announced today that they plan to have a net borrowing of 1.5 trillion in the next 2 quarters, 3 trillion annually rate of new debt. Maybe it's time to discuss budget cuts as part of the new debt ceiling debate. And this is what's really interesting because right now they're trying to raise the national debt so we don't go into default as a country. But we're not talking about what we can cut, really. Republicans are a little bit, Democrats are taking it all off the table, and they're actually trying to add more government spending in a lot of their new bills and then blaming Republicans about this. It kind of just blows my mind that our federal government keeps wanting to spend money, spend money, spend money, as well as send money overseas when the American people are actually struggling. And this is who pays the taxpayer dollars, who pays the salaries of our congressional members to basically make our laws for us. And they're basically mismanaging a lot of our funds and obviously using insider trading for their own personal benefit. Mario comes out and says if Congress does not raise or suspend the debt limit, the Treasury Department would be unable to continue to satisfy all of the government obligations by June 1st. According to a recent letter sent by U.S. Treasury Secretary Janet Yellen, Congress needs to act as soon as possible to increase or suspend the debt limit. If it is not done, the government will be unable to satisfy all its obligations by June 1st, 2023, potentially causing severe harm to American families and impacting the country's global leadership position, which we're already failing nationally. I mean, if you guys have been paying attention to what's going on in the news, or if you've been watching my channel, we know that the US dollar has been losing its global dominance for the world's reserve currency. A lot of the BRICS nations are actually getting rid of it. Brazil, Russia, India, China, and South Africa are the BRICS nations. But Yellen notes that it is impossible to predict the exact date when the Treasury will be unable to pay the government's bills, but it's imperative that the Congress acts soon to increase or suspend the debt limit. The Treasury is also spending the insurance of state and local government series Treasury securities, which will deprive state and local governments or of an important tool to manage their finances. She said that its past has taught us that waiting until the last minute to spend or increase the debt limit can cause serious harm to businesses and consumers' confidence, raise short-term borrowing costs for taxpayers, and negatively impact the credit rating of the United States. Therefore, Congress must act quickly to prevent this from happening. Is this the state of another financial crisis? And there's a lot of speculation that we are seeing the signs of what happened in the 2008 financial crisis. Mainly that was caused by a lot of the housing markets, which we're going to get into in just a second. But Joe Biden right here falsely claims Republicans are threatening to default. It says, newsflash, Republicans passed a reasonable debt limit increase that saves the taxpayers money. Biden is refusing to even negotiate. So he came out and talked about this today and basically said that Republicans are the reasons why the debt limit's not raising, but Republicans don't want unnecessary spending, but the Democrats do. Obviously, we've seen the American people hurting time and time again. With this, there's a lot of controversy that's going on, and I don't care if you fall on the right or the left. We're all feeling the pain that's going on right now. Housing prices are through the roof, gas prices, grocery bills, everything's getting too much. And with this, now if you want to become a new time home buyer, Biden came out with something else that we're going to talk about right here. So Robert Kiyosaki, he is the author of Rich Dad Poor Dad. If you guys don't know who he is, he says Biden rewards people with poor credit and punishes people with good credit. I've been irresponsible and had bad credit. Being punished for having bad credit was a life lesson for me. Being punished made me rich. Biden's worst in president in history. Biden makes all of us poorer. And if you agree or disagree, obviously he kind of knows what he's talking about. He's really wealthy right now. But what he's talking about is right here. Joe Biden administration has now made mortgages more expensive for those who have higher credit scores and put more money down. He says, so that's right. 630 credit score and 3% down pays lower interest rates than a 780 credit score and 20% down. And this is kind of crazy to me. As Americans, we've been taught since we're growing up to avoid unnecessary debt. Basically, don't you spend any money that you don't actually have. If you guys do actually borrow money, make sure you guys pay it off as fast as possible. Don't miss any payments, otherwise it can affect your credit score. Don't borrow too much money. And if you guys have like a 300 credit score, it's terrible. 500 to 600 is about average. You have a good credit at 700, and I think at like 750 to 780, it's excellent credit. And then I think it's exponential past 800, but it kind of just blows my mind. I could be off by a little bit, so sorry guys if don't have the numbers right in front of me, but it's kind of crazy that if you guys have been saving your guys' money to put a decent down payment down on your house, if you guys have been doing the right thing by building up your guys' credit scores, not buying unnecessary goods, and then actually having the money in your account so that if you do make a purchase with your credit card, you can pay it off right away, that you guys are actually being punished because people who tarnish their credit scores say that they want a house. So the federal government's going to be like, you know what, we'll get you that house, but somebody else will pay for it. This is time and time again of hurting the middle class. President Biden came out and says that he's not going to be raising taxes on the middle class. Obviously, he's not raising taxes, but he knows what he's doing right here. He's trying to hurt the middle class right now. People who are good home buyers who want to support a family now are getting it made harder now to do so. So this kind of is just crazy and blows my mind. Mario also comes out and says J.P. Morgan's profits massively while the Fed panics from a banking contingent. J.P. Morgan said that it just acquired that with the acquisition of First Republic will generate an immediate gain of 2.6 billion and 500 million in yearly profit. On top of all of this, the FDIC is covering 13 billion in losses, providing 50 billion in financing. Conclusion: the Fed is terrified more banks will fail, so they want to make sure that the First Republic acquisition goes smoothly to keep confidence high. And they did this heavily by supporting JP Morgan. Again, the Fed allowed this to happen because JP Morgan would go over the 10%, and in under certain contingencies, they allowed this to happen. And now they're actually getting a profit from this. And then they're also covering any losses that come off this for $13 billion dollars, and then giving 50 billion dollars in financing. But wait, the commercial real estate is cratering, and if this happens, the dominoes will almost certainly fall. Warren Buffett's right hand man, Charlie Munger, confirmed my fears yesterday by warning about the bank's exposure to bad commercial real estate loans. The worst is not over. And in this, if you guys want to, I posted this article right here, and it explains what Charlie Munger's saying. He worked um, with Berkshire Hathaway with Warren Buffett and is obviously like a huge multi-billionaire. He's one of the world's wealthiest individuals. And he comes out and says U.S. banks are full of bad commercial property loans. And with this, the commercial real estate was actually really popular up until COVID. A lot of people were actually taking out massive loans. And I think there's a couple of states, like San Francisco, for example, where commercial real estate's down like 80%. A lot of the commercial real estate buildings are actually not even close to capacity right now. I think about 20 to 25% of like a building are considered full, and then 75% are basically vacant. People don't want commercial real estate anymore. with anything COVID brought, what it did is allowed individuals to basically work from home, and companies realized how much money they can actually save by having employees at home. And then also just showed the unnecessary amount of employees that a lot of companies had. So they started firing and laying off individuals, and this helped a lot of the profit books of these individuals. So it's not over yet. Obviously, we've seen the actual real estate market for average consumer home buyers going to be going down a little bit here as well, but it's nowhere going to be near as catastrophic as this commercial real estate. And this is where the financing and stuff goes in, and basically what they talked about right here is covering 13 billion in losses and 50 billion in financing. And this is what's going to be blowing my mind. But yet again, they required and got 2.6 billion in profits and are expected 500 million in yearly profits. Yet the FDIC is still going to cover these losses because they know how catastrophic this commercial property real estate is. And the one bank that they don't want to fail is JP Morgan, because it has ties into everything. And the only thing that we're going to talk about right here with related to cryptocurrency is how JP Morgan is actually tied to Ethereum. So the reason why I wanted to talk about this is because it's going to play into my next video that we talk about what's been going on with the federal government playing favorites with cryptocurrency. So JP Morgan begins working with Ethereum before it launched. Jay Clayton initiates the Venture Capitalist Working Group, which becomes the BTC/ETH, which is the Bitcoin/Ethereum Free Pass speech. For those of you guys that don't know, Jay Clayton was a director of the SEC. And with this, he worked for a company called Simpson Thatcher. And basically, when he left there, what he did was he received a severance package, and the amount of money from his severance package was basically increasing contingency on how well Ethereum plays in the market. So, what did he do before he left the SEC? He sued Ripple. Okay, so Ripple's been in a lawsuit with the federal government, which is the Security Exchange Commission, is a specific branch of the federal government that's in a lawsuit with. But Jay Clayton then leaves the SEC and joins Apollo Global. Christian Moy runs JP Morgan Digital Assets Division. Christian Moy leaves JP Morgan to join Apollo Division to run Digital Assets Division. And it's a small world. And this kind of just shows how corrupt and how like small niche these individuals are, and how they essentially wanted Ethereum to succeed so well. Obviously, we saw in the last House Finance meeting, the new SEC director, Gary Gensler, wouldn't officially say if he considered Ethereum a security or not, or if it's considered a commodity, because he knows how big of an influence it can be, especially with what's been going on in the pending lawsuit right now, Ripple versus the SEC, and the Ethereum free pass speech still waiting to be determined if it actually can be used in the lawsuit. So, put down in the comments what you guys think, though, about the banking crisis and the real estate housing markets. And if you guys have any questions or concerns, I'll answer them in the comments as well. I answer everything that you guys do. If you guys, again, can like, comment, and then also subscribe if you guys haven't already. If you guys follow digital currency at 200 and 250 subscribers, I'll be doing an XRP or an HBAR giveaway. They're a smaller giveaway, but details will come when I get to 200 and 250 subscribers. Thank you guys for watching my video. If you guys can invest with the big dogs, stay on the porch. Thank you guys and have a good one.